In this video, we are going to talk about the best time of day to trade Forex. We all know that the market's open 24 hours a day, 5 days a week, but that leaves a big question unanswered. What time each day is the best time to trade? So we're going to dive deep into that here in this video. If you're new to my channel, if you're new to the feed, I appreciate you joining us. Make sure you hit the red subscribe button and let's get into the video. What's up, traders? Welcome back to the channel. For those of you who are new, my name is Austin Silver. I appreciate you being here. I appreciate you checking out my trading videos. Do me a favor, like I said already, if you are new, hit the red subscribe button below me so you join the team, you join our family here. That way you won't miss any of the future trading content that we're always putting out for you and the rest of the community. Now, today we're talking about a very, I would call it, hot topic. This is one of those questions that comes across our desk all the time. And it is, I think, something that is not discussed directly enough in the trading education community, because this is a huge piece of value almost that attracts people to coming to and getting active in the Forex market. That piece being the fact that the market's open 24 hours a day, 5 days a week. But like I said in the intro, that really does leave a big question unanswered as far as, of those open hours, when should we be most active and why is that? You don't want to just blindly follow something. You want to have some solid statistics, some solid backing to making that decision. So in this video, I'm actually going to pull up the tri-annual report of all the central banks throughout the entire world, and I'm going to show you which pairs are the most active, and then I'm going to show you which times they are the most active with hard statistics to back that up. So first, I want to break down each of the sessions. Now, some people will say there's 3 sessions, some people will say there's 4. I like to explain it as 3. We have the Asian session, the London session, and the New York session. To break that down a little bit more specifically, I combined the Sydney and Tokyo sessions to make the Asian session. Now that runs from about 5 p.m. Eastern time to about 1 or 2 a.m. Eastern time. As I go through these next 3 slides, this one and the next 2, you're gonna see the times have a little bit of a variable to them, and you're gonna wonder why. I will answer that question for you in a second. Here, the London session, you can see, opens up around 2 or 3 a.m. Eastern time, New York time, and it closes around 11 a.m. or 12 o'clock noon Eastern time. And then in the third session here would be the New York session. That's from 8 a.m. or 9 a.m. New York time to about 4 or 5 p.m. Eastern time. Now, the reason that there was a little bit of variability in the start and end time of each session is because that depending on the broker and that depending on the time of year, these sessions change. As you can see in this chart here, summer hours and winter hours, using daylight savings, they set these on specific dates, will change. And even within the broker, depending on which broker you're using, that will also change when they open and close, specifically when they open on the start of the week and when they close. Some brokers close an hour earlier than others. So you really should look at your broker's timing to figure out exactly when they're breaking off sessions. But for, I think, holistic purposes, for everyone watching this, the way that you can approach it is the way that I teach it here in the course, the way that I'm sharing with you in front of your screen. If we round these numbers through the 3 sessions to the extremes, meaning give them the benefit of the doubt, then you can really start to see how the entire Forex day is broken up into 3 separate sessions. You have the Asian session from about 5 p.m. to roughly 3 a.m. It'll start to slow down around 1, maybe 2 o'clock, depending on the time of year, as they change over into the London session. And that's going to run from about as early as 2 a.m. to as late as 12 noon, New York time. These are all Eastern Standard Times. But these are the times that I would recommend you use for the sessions. And then, of course, you have the New York session from 8 a.m. to 5 p.m. So breaking it up this way allows you to see the entire day, like I said, in 3 separate chunks. And that's really important because each one of these trading sessions have different volume and different volatility. We're going to talk about volume and volatility more as we move through this video because that's what makes the market move. You need volume and you need volatility. So what generates volume and what generates volatility, right? We need to figure that out. Well, this is where we want to turn to those hard statistics that I was talking to you about in the beginning. We can look at that triannual report, and I'm going to make a separate video completely breaking down the entire report because most of you are like, Austin, what the hell's a triannual report? I'm going to show you what it is in a separate video, breaking it down into detail. But here, just from their report this past September, which was what, 2 months ago? we can see that still, as it was 3 years ago and as it was 9 years ago, the dollar is majority of the trading that goes on every single day. The euro being second, the yen being third, and then the pound being fourth. Now you're going to say, Austin, these percents add up to more than 100%. Because there's currency exchange rates between two pairs, the percentages on the scale that they use, you can see it right here. On the right side of the screen here, you see how it says 88, 32, 16. That's the percentage share in 2019 of the entire market. But because there's two currency pairs, this percentage doesn't add up to 100, it adds up to 200. And they explain that in the key at the bottom of the page that I took this screenshot from. But you can see from 2004, 3 years later, they did the survey in 2007, 3 years later in 2010. And since then, the dollar has always been the majority of trading. So let's not lose focus here. We're going to make it, like I said, a separate video talking about the triannual central bank survey, and it was put out, just so you know, by the Bank of International Settlements. You can Google this and find it. It was put out September 16th of this year. You can do all the research on this yourself. I'll even link it below if I can find it real easy for you guys if I remember. But to stay focused on the purpose of this video, what is this showing us? If we go back, these numbers, the 88, the 32, are showing us where the volume is. This is showing us where people are trading, which pairs are being moved. And remember, if we go back again, what makes the market move? Volume and volatility. So now we know where the volume is, right? We know based on hard statistics right here from this survey, we know where the volume is. It's in the dollar, it's in the euro, it's in the yen, it's in the pound. So what creates the volatility? To me, it's three main things. It's speculation between traders, you and me trading every single day. It's global transactions between large banks, governments, central banks, and institutions. And of course, you have speculation on political events and news that also drives the market. These three categories, I think, are what drive the volatility. So if you can layer the volatility, the events, the thoughts, the human emotions, the macroeconomic actions, if you could layer that volatility on top of pairs that have volume, you're going to find the best times to trade. So when you bring volume and volatility together, you're going to find pairs that move, pairs that don't get irregular, don't have spreads that get too big. You're going to find solid technical setups that can present for you. Now, the title of this video is what are the best times to trade, right? Well, to break that down a little bit more refined, I want you to understand that you have to trade the same time every single day. So what that means is that when you build your trading plan and you build your process, you don't want to focus too much on, oh, I missed moves early, I missed moves late, I can't find my time. You want to build a set time that works for you with your other job, your other business, your family, your personal health, all of that. You want to build that set time that you're going to trade every day. But you want to make sure that that set time is appropriate because you want markets that are open and you want to trade pairs when their markets are open. The most volatile time, and this is when I trade, is that London to New York open. Very often we'll find great trade setups that fit our system early London, 2 a.m., 3 a.m. New York time. But we'll also find trades 4, 5, 6, 7, 8, and even 9 o'clock in the morning, New York time, all that fit the same system, the system that I teach in our course, all that are taking advantage of this volatility and this volume that are overlapping during the London and New York sessions. Typically, you will see, and sometimes this is not the case because there's never 100% certainty in all of this because it's trading, but more often than not, you'll see the Asian session be the slower of the three. And that's because for some reason, I'm not going to try to say exactly why because I'm never the guy clicking the button on the other side of the screen, right? But for some reason, we tend to see it very range bound during those first 8 hours from 5 p.m. New York time to about 1 or 2 a.m. New York time. That period is very much a consolidation period for majority of the currency pairs. And I think you can point to the fact that the dollar is 88% of currency transactions. The dollar is closed during the JPY, the AUD, the NZD session, during that Asian session. We're all asleep here in New York. So we have to wait for that market to wake back up. We have to wait for the pairs to get active because what do we need? volume, and volatility. So when you ask me, Austin, what's the best time for me to trade? My answer is always first, you have to pick a set time and stick to it every single day. For me, that time is 6 a.m. I want to start my trading at the latest by 6 a.m. And I say that because some days I can't sleep, so I just wake up and I start trading earlier, but 6 a.m. is my latest. And I'm going to trade all the way through to 11 a.m. every single day looking for opportunities because I know that's where the volume is and that's where the volatility is. I'm not going to come here at 4 o'clock in the afternoon, New York time, and try to look for trades. It's just going to be slow. Why? The banks are closed here in New York. Everybody's going home. They're done for the day. They're coming back tomorrow, but they're done for the day. And I know that's a big, I think, barrier that a lot of traders don't run through. They don't get through the idea that, look, they're coming back tomorrow. You need to chill and stop trading and come back tomorrow. And today even, it's actually kind of good that I'm making this video today. Today was a really great example of that. We had no A setups today. A couple of B ideas that did work out. I didn't trade them. I stayed completely flat today just because I know I can come back tomorrow. I know the system presents setups because we get this volume and volatility overlapping. I know it presents setups that are much cleaner than what I saw today. So you just come back the next day when the volume and the volatility is there. So I would say first, build the time, build the sessions that fit your plan the most so you can do it consistently with the kids, with the wife, with the girlfriend, with the boyfriend, whatever it is. You want to be able to do it the same times every single day, and you want to make sure you're trading pairs that are open, that are, trading. People are trading them during the sessions that you're trading. I hope this video provides a little bit of clarity to when you should be trading to the most active times in the Forex market. I want you to also understand one final piece is that this changes. Because of Brexit right now, because of, the trade deals with China, the euro, the dollar, the pound, they're really volatile. And there's a lot of volume in them because everybody wants to speculate on this too. Not only that, but you have the governments moving money around and big companies moving money around in anticipation of the Brexit stuff going on. So the volume and the volatility will change. You just need to follow it. Stick to set times and follow the volume and the volatility. You're going to be much better off. You're not going to get chopped around, and that's what I want you to do. So I hope this helps you make better trading decisions going forward. If you enjoyed the video, if it did provide you some clarity, drop me a comment below. If you have any more questions about it, drop me a comment below as well. I'm always going to answer you guys. As always, I appreciate you checking me out, watching all the way through. Make sure you guys go follow me on Instagram at AustinSilverFX. Make sure you guys subscribe here so you don't miss any of the future videos. And as always, guys, I appreciate it, and I'll see you in the next trading video.